Hey everyone, my name is Jay Garrett. I am the co-owner of NJ Realty Pros. I'm here with my business partners and also co-owners of NJ Realty Pros, Anna Safonova and Alan Hack. And we have a special guest today, a longtime friend and amazing mortgage specialist who's going to fill us in on how COVID-19 is affecting the real estate industry from a financing perspective. So without further ado, hey Marv, how's it going?
Going really well. Thank you for having me today, and hope that you and all of our friends and family are staying safe.
Thank you
Absolutely.
for coming on. Tell us a little bit of what's going on your end from mortgage perspective. What do you see happening? What are the current trends? Are there any guidelines that change, whether it's conventional or FHA product? Anybody who was approved for FHA maybe something that they need to kind of keep an eye out on.
So the first thing is that there's still a wonderful opportunity to refinance if you haven't done so already, right? So rates are low, maybe not at the very bottom, but rates are still really, really incredible. Okay. It's a very personal topic, so it always depends on what your purpose is, whether it's just rate and term. Some people may have different obstacles with other types of loans, though, because of some of these recent changes that have taken place. So if our clients or friends have started the process of getting pre-approved, maybe for plans of a future purchase, it's really important for everyone to go back and revisit that, right? So I know that I've experienced clients who have had salary decreases. Maybe they've had a reduction in commissions, reduction in bonuses. Maybe they're an hourly employee and they're seeing hours being cut or the elimination of overtime, right? So from an income standpoint, if you've had a change, you have to go back and look at your loan again. Assets, some people had their money in the stock market, so we want to go back and revisit, is there any change with assets that might impact, right? So hopefully all of our clients who are doing future purchases have the money in cash so that that's not a problem. The other component is what program was being used. Okay, so for everyone, the focus is if you have a credit score that was a little lower, we would want to spend this time right now on improving credit scores. So the market has changed a little bit, and let's look at it like risk off, right? So riskier loans are a little bit more challenged right now. So low credit score, got to watch that. Maybe you were an FHA borrower, a government loan borrower, FHA or VA. So those loans are typically 0% down or 3% down. That's risk for the lender. So some of those loans are challenged now. If you combine that with a low credit score, you actually might see that loan disappear, not be available for you. Okay.
When you say, I'm sorry, I'm just going to jump right in and ask you
Yeah,
real quick. So when you say low credit score, can you go into that a little bit more just so we have an understanding of what they're looking for? What would be the ideal scenario maybe? And if your credit scores is at a certain number, where should you be in order to possibly, what does a lender want to see on a paper?
yes. So if a credit score was from 580 to 640, most of those loans will disappear now, right? 640 to 660, little bit better, but we might see some compression where those clients have to pay points, right? To pay a fee to buy that, to obtain a rate. And that typically goes against those clients. Those clients sometimes don't have the down payment or have the ability. We'll play an important part for those borrowers on purchases by using a seller assist for closing costs to help pay for points to help those borrowers to buy. So real important for you guys to keep that in mind. Look, the sweet spot is going to be those that have superior credit. But it's the sub 680 scores that we want to be most careful of.
Mhm.
And now, are there any things, 'cause as crazy as it seems, I'm still seeing and hearing, because Alan, Anna, and I run a Facebook group of agents, on this topic specifically, and there are a lot of bidding wars out there. So if we represent, a borrower, are there things that we could do to ensure to get our client's offer accepted, that will be in favor of the borrower? Like you said, having them rerun for a second pre-approval, and maybe some other tips that you could say.
Yeah, I mean, look, it certainly is a good time for an additional note from the lender saying that, here we are on whatever, April 8th, and we have revisited and make sure that the client is current to today's guidelines, right? Now, look, for clients that are under contract, it's going to be more important than ever to have that loan locked as early as possible. So when changes happen in a market quickly, those loans that have already been locked, they're committed to, and that loan will still close. So there may have been FHA borrowers who experienced the loan being flat out denied and rejected if their loan wasn't locked, before last week.
Okay, so that's a really important point, guys. So for anybody who's listening, if you're in the middle of a purchase, now we've already done that with our clients, but make sure that your loan is locked ASAP, because that'll help ensure that you get to the closing table.
Yeah. So we're experiencing some challenges as well with the jumbo products. So any loan that's over 510,000, 400, they got to be looked at a little bit more closely to make sure that the market is still absorbing those loans.
Hey, Marvin, I've got a quick question. So you were saying a minute ago about people locking in their rates and they're committed to those loans. As we know, like you were saying before, a lot of these people are becoming furloughed, or they're only getting 75% of their income. How does that affect those particular loans when somebody, let's say, is still getting paid, but only at 75% from an income standpoint when their loan has already been locked?
Mm-hmm. So if we were aware of it from the beginning, we would take the worst case calculation on income with a letter of explanation as to what's happening, right?
Okay.
Loans that are in process, look, we've experienced this. And let's say that we have a husband and wife and they both work. One was placed on a furlough, and sometimes we've just taken the borrower off the loan and still made the loan work. So case by case, just clients should be honest with what is happening with their lender. Look, it's a very fluid situation right now for all of us, right? So
Right.
just make sure that communication is really excellent.
Oh, and I wanted to ask you or clarify, because I know a lot of people associate the rates to, I guess, the treasury rate, whatever other rates are mentioned on the news, but they're not all equally tied into the mortgage rate. So, I just want to, clarify that rates are still historically amazing. They're just not at zero. So is that what the case is?
Yeah. So when
Negative.
when the Federal Reserve lowered the overnight lending rate to banks, right? It's called the discount windows. So the government wanted banks to be able to come to the Federal Reserve and get all the money that they need and give it to them at zero. It actually had nothing to do with mortgage rates, right? That said, the government has been stepping in and buying both mortgage-backed securities as well as all different types of treasury bonds to push rates down. So, a little bit complex, but they bought so many bonds in a 1 week period that they kind of twisted things a little bit in the market. So, rates have been a little volatile, but overall, rates are, just like Jay said, rates are extremely low, maybe not as low as they were, a month ago, but there's still a huge opportunity, And so look, we're all focused on purchase. And I think that I want my friends and family and people to know that it's a wonderful time to look forward. And if you wanted to buy, really nothing has changed. We've got this little blip in the world. And as long as we're healthy, employed, that goal really shouldn't change. And there will be opportunities now. And those opportunities are going to be to buy a beautiful home and to still get a phenomenal rate on that. I think it's a great time. Make plans, we're, God willing, we're about at the peak in this crisis. And within another 2 weeks, we start to get to the other side of that curve and get back to normal in the next month and a half.
Absolutely. And we've said it on other, I guess you could call it shows now because we're doing this regularly, but on other videos that we've done that, there's going to be a lot of positives that came out of this, for us in particular, virtual buying and virtual selling and videos like this, like with our clients, but lots of good stuff that I think is going to make things more efficient and better, and a smoother transaction for everybody. So out of some challenges, I think comes a lot of positives.
Yeah. I mean, look, in the mortgage industry, we've worked through some of them. So appraisals are now happening using drive-by appraisals or desk appraisals for most transactions, not all, which is that's pretty amazing. And the process of signing closing docs, we're getting much closer to the future of being able to do some sort of a virtual closing. Maybe not in its entirety, but we're waiting for legislation to get wrapped up in New Jersey to allow online notaries.
Yeah, that's the Ron program, right? Remote online notary. So yeah, we've been hopefully that'll be soon because that'll make things a lot easier.
Yeah, totally. But everyone has worked at solutions. Driveway closings are the new trend.
Absolutely.
Right. No, this was great.
I had a question actually. I just had a closing in Toms River very recently, and Alan knows. We closed the property, we closed in our office, and then the lender checked for an employment right after.
Yeah.
What's up with that?
They've always done that. So
At the day,
as a loan,
closing.
yeah, as a loan is sold to the servicer has the right to check employment. So that can happen. And, look, that represents risk to companies like mine. They might have to buy that loan back.
Huh. But I mean, I think it was always done, but it was done several days before, not the day off or at the time of the closing. Is that something that's new or just?
They always had that right to. So once again, I mentioned that word risk off, right?
Got it.
So what can a servicer do to protect themselves as they buy loans? And that might be verifying employment before they complete the purchase of that loan.
Interesting.
So basically at the last possible second, they'll check just to make sure everything's still good.
Look, ordinarily, we verified employment 10 days prior to closing, right? The same time that we would look at credit and do a soft credit pull and look at that, right? All 10 days. We're down to doing that now on a 3-day basis. So servicer, before they buy it, yeah, it doesn't shock me that they're going to check also.
Makes sense.
I mean, Anna, so no risk to that client. They got the house. The risk is to those of us in the industry, right?
Yeah, no.
So once the docs are signed, the closing's done, they can't go back on it. It's more of
Can't
an
go
issue
back
with the
on it.
servicer and the end bank. Yeah.
Yes. So individual mortgage companies, right? They'll have buybacks, loans like that. Maybe they'll get to sell them as a scratch and dent, so to speak, once that person gets back to work. Yeah, challenges.
Cool.
Okay, very good.
All right. No, I think this was really good. It was very informative. Thank you very much, Marv.
Thanks for having me.
No problem. Do you want to take a quick second to give a way that people could reach you if they have any questions?
Of course. So best way to reach me would be the office phone number, 732-446-2900, or email to marvin@mortgagemarvin.net.
Awesome. And I could
Perfect.
personally speak for Marvin's done, helped 50, 60 plus of my clients now. We're probably approaching 100 soon. He's excellent. Everybody raves about him. So he's got my endorsement. Anyway, thanks so much. We'll talk to you guys all later. And we'll be back soon with another version of our show. We need a name for it. Later,
Bye,
guys.
guys. Thanks.
Thank you.
Hi, Marvin. Thanks.
All right. Take care.